Mike Briggs is our cattle market analyst this week. The USDA's March cattle on feed report shows Nebraska led the nation with nearly 2.5 million cattle in feedlots of more than 1,000 head capacity. Overall, the U.S. was down about 1%, while placements were 8% below a year ago and marketings were down 2%. In grocery stores across the country, all fresh retail beef reached another new high in February, averaging $6.03 per pound. Ground beef increased slightly from January to average $4.24 per pound. That's also a record and 68 cents more expensive than February 2014. The latest sterling beef profit tracker has feeding margins in the red at more than $171 per head. But when we talked with Mike Thursday morning, we began by looking at the recent rally in cattle markets.
Well, it's been great in my mind just because fundamentals finally started to make an impact on the market. You know, we've talked about that in previous shows, that the technicals were just taking it over and the funds were just pounding it, and it didn't make any sense to any of us, and wondering why don't fundamentals matter? Well, they finally did, and I think we're going to see that now clear into maybe the middle of June.
Meaning that the rally continues?
I think the rally grinds higher because the cattle aren't there. The cattle weren't, we talked about it, the cattle weren't there in March. They're not going to be any more in April. Now maybe May and June you'll see a few more calf feds come to the market, but I just don't think you're going to see that many cattle. Now on the other side of that, we obviously are making cattle bigger, so the total meat supply isn't quite as low as it would have been otherwise, but we're still going to be short cattle and short beef.
The cattle on feed report showed lower numbers of cattle in placements. Did you interpret that to be bullish?
It's friendly, and you're going to continue to see that because you've got an inverse in the market where the nearby is higher than the deferred, which makes it impossible, well, not impossible, it just makes it really hard to place cattle. And the market is basically telling you, we want the cattle now, we don't care about in the future. And that's what's going to happen. You're going to see feedlot placements continue to be under last year.
How much does this rally help margins?
Considerably, because you were into where the numbers were pretty red, and in fact in some cases really red because of the bad weather in January and February. The cattle did not perform very well, and you had a big drop in the cash, and cattle were losing money. Now we're back to where we got a positive margin, so it's a lot more fun again.
Yeah, I bet it is. Next week we have some potentially moving market reports for the crops at least.
Yes.
How are you approaching that for corn? I'm
going to have myself covered. I think I'm going to be kind of flat, though. I might have a little bit of length in the market, but not very much. It's never a good situation for the market when the farmer's got all the grain, and he does. They have always called that weak hands, and I'm afraid that's still the way it's going to be. Eventually, the market's going to force them to bring it to town, and probably not at a price they like.
Yeah, you're bearish in the corn market then? Overall,
now they make a big deal about how we might come up short planted acres. We'll see. I don't know. Maybe you will. I hope not, because I like cheaper corn price.
Yeah, I'm sure you do. So one thing that's not cheap is the price of beef. Reached another high in February. What is the consumer doing?
Consumer demand has been tremendous, and it just tells you hamburger's kind of king here. And the consumer has been willing to pay for it. And I think, unfortunately for them, I think it's going to stay high, and it's probably going to get higher because not only is slaughter down of fat cattle, but your cow slaughter is way down. And that's not going to get any more because the guys are going to, the ranchers are going to try to keep those cows so they have those calves, because the calves are very profitable right now. So they're not going to get rid of cows unless they absolutely have to, and unless Mother Nature keeps it dry, which it is a little dry, especially in western Nebraska right now. If we have another drought issue, that's really going to be serious to this cattle market. We need to turn this thing around and grow supply, not have another weather force reduction in the herd.
Tell me about slaughter weights that we're seeing, or at least that you're seeing in this feedlot.
I think they're going to remain large for several reasons. One, you've got a nice margin there between what it's costing you and what you're getting, and it's really hard to replace cattle. So the feeder fat swap is horrible. So you just as well keep what you have, make it bigger. The market's paying you to do it. So I think people are going to continue to do that until the market tells them differently, or until corn gets too high and we've squeezed that margin, one of the two. But I think slaughter weights remain high.
So what we saw last year, the consumer hanging in when the price got expensive, do you think it's a realistic expectation that they'll do the same and not go to a cheaper chicken or pork come grilling season?
I absolutely do, because one, gas is cheaper, so they've got more cash in their pocket. Two, it was high last year, and I read this little smart remark the other day, so I'm just going to repeat it. What do you want to put in your bun? Ground hamburger, ground chicken, or ground pork? And hamburger's king. So we're doing good so far. I really don't see the consumer straying away, because I don't think financially, they're in a better position, so they don't need to, and that's what they like.